Good morning. Hey, hey, hey. Happy Monday. All right, let's see. Get everything situated. That's not it. All right. Hi, y'all. Happy Monday. Happy October 9th. It is one of my best friend's birthdays. She won't be here, but happy birthday to her. I'll give everyone just a few seconds to log in. Oh, you guys are already coming. Good morning. Good morning. As you're jumping in, go ahead. Let me know where you're from. Today is a Q&A session. So I do have a decent amount of questions already that people have submitted. I'll be able to go through those. But if you were here live and you have any questions related to the training we just did, anything, fractional CFO, tax, accounting, whatever it is, if it's in my wheelhouse, I'll answer it. So go ahead and put it in the comments. Otherwise, I will, like I said, I have a decent amount of questions that came in mostly over the weekend, actually a couple even this morning. So I will work on those. Yeah, but happy Monday. Happy Monday. Let's go. So I am Bree Beers. I have been in accounting for 20-ish years. I keep saying 20-ish, guys. One day I'll tell you exactly but it was a process. So 20-ish years. I own Bree Beers and Associates. It is in its 7th year, and it's a tax preparation and tax planning firm. We're here in Colorado, but we work with clients across the country. We specialize over there in small business and complex individual tax returns. So in complex individual tax returns are ones with business owners, right, where you have K-1s, or maybe you have rental properties or investments of some sort. So it's kind of our jam over there. I'm also the founder of Peak Prosperity CFO. So we empower owners of 7-figure businesses to boost their annual compensation by $100,000 in their first year of working with us by providing profit-centered thought partnership. What that means in everyday terms is we work with 7-figure business owners who are feeling stuck and wanting more work-life balance and more money in their personal bank accounts. So yeah, that's kind of my passion project right now, and the clients I have right now are amazing. We'll kind of end with that, kind of talking a little bit more about Peak Prosperity and what we do over there after we do the Q&As, the questions I've got. But yeah, the clients I have right now, I love. And this week I have the doors open to take on 5 more. We'll see. 5 sounds like a lot for me, but I have a plan and we'll be able to do it. So we'll end the day with that. So let's jump into our questions. All right. So the first question I got, I'm not taking these in the order. They kind of came in all my different platforms. And I kind of tried to group them together in a way that made sense to me. So we'll see. So the first question I got asked was, what do you consider the top takeaways from the training series? So if for some reason you are just joining me today for this Q&A and you're like, what training series is this talking about? Over the last 3 weeks, I did 9 training videos about scaling your 7-figure business or scaling your business to 7 figures. Tips, tricks, and stuff, everything along the way. But where was it going? Sorry. But top takeaways. So I think the first one, you guys, is that profit should be your number one KPI, right? I think I kind of drilled that point home. KPI is a key performance indicator. And so while a lot of times we focus on our revenue, right? We're a 7-figure business, we're a 6-figure business. We focus on that revenue number. Really, profit is what's important, okay? Because profit is the cash we have to invest into ourselves and our dreams and our personal, bank account, or reinvest into the business and help fund the tools or the team members that will make it so we don't have to work so much in our business. So profit should be your number one KPI. Also, building a team. Another takeaway, build a team. If you do not want to be spending all of your time in your business, you've got to hire people that can do things for you. And in this training, we talked about what that looks like. And really, if I was to kind of summarize it, right, it's like, where are you now? List out all the things you're doing in your business, right? All the tasks you're doing, everything. And then your end game should be to be the CEO of your business, right? Which means you're doing 2 things. You're managing your leadership team, even if that's only one person. That's my goal, right? Is to manage one person because I don't like managing people, and to make key decisions in your business. Those are the two tasks, the two responsibilities of a CEO. So it's getting from doing everything you're doing in your business to being the true CEO of your business. And the steps along the way. So one of those things you do is you build a team. Once you build a team, you're able to work in your zone of genius, meaning what is it that you bring to the table that maybe no one else can do, or what do you do better than anyone else? And then the other, I think, takeaway is to use your financial statements as a tool to scale your business faster and smarter. And there's so many different ways to do this. And whether you do it on your own or you hire a professional, an advisor, someone, a CFO to help you with it, there is so much data in your financial statements. Not just the revenue you're making, right? The profit, your cash flow, the expenses, the costs that you're spending. Those financial statements are a tool that can help you scale your business faster and smarter, meaning it's not just a shot in the dark, right? Like, I want to grow my revenue. It's like, okay, I want to take home more money. So what I need to do is increase my profit. How I do that is one of many different ways that but all of that information on how you can do it is found in your financial statements, right? Your revenue, your profit, how much each segment of your business makes, right? If you're a product-based business, you might have multiple segments. You might have, let's say, excuse me, I like using my t-shirt company, but let's use an actual client. I have a client in food distribution. So they make sandwiches, they make burritos, right? They make soups. So each of those is a segment, right? So your financial statements can tell you which one, how much is each one making in revenue? How much is each segment costing you to make? So what is the profit in each of these segments? All right. There's so much information in your financial statements. So top 4 takeaways. Profit should be your number one KPI. Build a team, work in your zone of genius, and use your financial statements as a tool to help you scale your business faster and smarter. All right. The second question I got in is, can you go for reasonable compensation versus draws again? Yes. So these terms, it depends on how your business is set up. All right. So if you are, and how your business is taxed, not set up. Let's get some background information. A lot of times people are like, should I be taxed as an S Corp or an LLC? Being taxed as an LLC isn't a thing. All right. Here's how you can be taxed. All right. You can be taxed on your Schedule C, meaning you are a sole proprietor or a single member LLC who has not elected to be treated as an S Corp for tax purposes. All right. So if you're a side hustle, if you started a business, anytime you started a business on your own, by yourself, and you did not set it up as a corporation, and you did not elect S Corp status, then you're a Schedule C business, because you're either a single member LLC or you're a sole proprietor. Okay, so your business activity goes on Schedule C of your individual 1040 tax return. All right, you with me? That's the majority of tax owners out there. That's the majority of business owners out there. You report your business on Schedule C of your 1040. Okay. Now, if you set your business up as a corporation, back when you set it up, then you are filing a 1120. If you are a partnership, meaning you set your business up with one or more other people, if you did not elect that S Corp status that we'll talk about in a second, then you are a partnership. Okay. So the S Corp election, that's all it is. It's not a way to set up your business. It's a tax election that you can choose to elect no matter how you are legally set up. Okay. But without that S Corp election, you are either a Schedule C business, you are a corporation on your 1120, or you are a partnership on a 1065. Okay. Corporation, you have to have said, I want to be a corporation. So if you did not do that, mark that out. You're left with either a Schedule C or a partnership. If you're all by yourself, you're a Schedule C. If there's at least one other person, you are you default to a partnership. Now, any of those, a corporation, a Schedule C, LLC, or a sole proprietorship or a partnership can elect S Corp status. And that is just a way to treat your business for tax purposes. There's a small bug flying around. I'm going to get him. All right. So unless you are a corporation or taxed as a C Corp, reasonable compensation does not apply to you. Okay, so we'll circle back around to reasonable compensation for my S corporations and my corporations, because there are a lot of you. Like most of my business clients are either partnerships or S corps. All right, but if you are not, if you did not elect S corp status for tax purposes, then everything you take out of your business for personal use is a draw. All right. Everything that you take, so you have your business, all your money goes into your business bank account, all your business expenses come out of your business bank account, and the cash that's left over, that's yours to do with it what you want. You can keep it in your business bank account, you can pull it out to pay your personal business. That's a draw or a distribution. All right, whatever you want to call it. But that money has already been taxed, so it's yours to take out. And when you take it out, there's no tax implications. All right, typically, because it's already, that cash is coming from profits within your business, you already paid tax on. Now, if you are a corporation or a business who has elected S Corp status, you are required to take a reasonable compensation from your business. What that means is you are a W-2 employee within your business, and you got to pay yourself a reasonable salary, a reasonable W-2 wage. All right, so if you're an S Corp or a C Corp, then you have your reasonable compensation, that's your W-2 wages. So let's say you make $100,000 from your business, that you pay, your business pays you a $100,000 salary every year. All right. So you have $100,000 that you receive from your business that you are taxed on, because that is W-2 wages, just like if you worked for someone else, right? If you came and worked for me and you were an employee, I would pay you a salary. That would be income to you. You pay taxes on it, right? Then when you own your own business, if you're an S Corp, excuse me, then you also pay on your profits. You pay tax on your profits. And from there, that money, you're welcome to take out and make draws or distributions from as you wish. So let's use this example. Let's say your business, let's start simple. Let's say your business pays you that $100,000 salary, right? So it pays you a W-2 wage of $100,000 a year, but you need more than that, right? You need to take out an additional $30,000 a year. Okay. You take that out of your business as a draw. And when I take that money out, there should be, typically there is no tax implication for that. There are some caveats of excess distributions, meaning if you're taking more money out of the business than you have equity, then you're going to pay on that, because really what you're doing is you're taking money out from debts. Okay. But that doesn't usually happen. Usually if there's no equity in your business, you're not taking money out. So that money comes out tax-free. So can you go over reasonable compensation versus draws again? So reasonable compensation is a W-2 wage paid to you as an employee for the services you render to your business. And draws, if you're an S Corp, right, is the money you just take out. It's kind of a return on investment, right? Like I've paid myself my salary, but I need to take more out, and as the business owner, you're entitled to do that. All right, I hope that makes sense. Let's see. Okay, cool. No questions. All right, next question. What amount of money do I actually pay taxes on? So this kind of goes hand in hand with the question I just answered. But what amount of money do I actually pay taxes on? So if you're taking a reasonable salary or reasonable compensation because you are a corporation or an S Corp, right? You're going on your personal tax return, you're going to pay taxes on that. You receive a W-2 saying that you received $100,000 in W-2 wages, then that's earned income on your tax return. You're going to pay taxes on that. Hopefully you withheld, right, on your W-2. Hopefully you withheld some money. So, you're treated just as if you were an employee for someone else, right? But there's money. So you were going to pay taxes on that reasonable compensation. And then as a business owner, you are going to pay money on your profits. And what that looks like, if you're a Schedule C, right? Schedule C's, you didn't have reasonable compensation, right? It's money into your business minus all of your expenses equals your Schedule C profit. And that is the number you're going to pay tax on if you're a Schedule C business. If you're a partnership, then it's all the money into the partnership, business level, right? All the expenses the business level pays. You end up with a profit. The business has a profit, and then you're going to pay on whatever percentage of the partnership you own. So if it's 50-50, you're going to have to report 50% of that profit on your personal tax return and pay taxes on it. All right. Thing to remember is that businesses, unless you're set up as a C Corp, as a corporation, which I think I have like 3 clients now that are actually C corporations, the business does not pay your taxes. Everything flows through to you as the business owner, and you as the business owner on your 1040 report all the income, pay all the taxes. All right, so partnership, it's whatever percentage. Same with S Corp, whether you're the only owner of an S Corp or you're a piece of an owner of an S Corp. You're not a piece of an owner. You're a partial owner. God, words breathe. You're going to pay taxes on whatever percentage of the profit is allocated to you. So if you're the only owner, then you're going to pay on 100% of the profits from your business. It's going to flow through on your K1, right, to your personal return as ordinary income. If you're a 50% owner, then 50% of the business profits is going to flow to your personal return and be paid on your paid taxes. All right. So just a caveat here, you guys. This all kind of plays into fractional CFO work, but this is definitely in the tax area, which I'm so fine answering these questions. That's what I offered. But just so you know, like these are definitely questions, that if you work with us in Bree Beers and Associates, we're going to be able to help you with. All right. All righty. Next question. All right. This one says, my business is still new and nowhere near the 7-figure mark yet. Cool. I want to get it there. Do you have one piece of advice to help me get it there faster? Okay, this one just came in this morning, and I was kind of thinking about it as I was in the shower. I have a couple pieces of advice. I don't do just one. But the biggest thing the number one takeaway, if I just have one piece of advice, is, so this says, I'm nowhere near the 7-figure mark, but I want to get it there. Why? I think it's important to make sure that your business goals align with your purpose and your personal goals and your intention. I think so many times we get caught up in other people's definition of success, right? If you've been watching this training series, right? Like there is a lot of emphasis on 7-figure business just because that is who Peak Prosperity, that is kind of our ideal client. Our clients are 7-figure business owners who just still need help, who don't have it figured out, right? Who still need some guidance to get that work-life balance and money in their bank account. So we talk a lot about 7-figure business owners, which could be like, as someone watching this could be like, okay, well that I got to get there, right? I got to get to 7 figures. That's what Bree's telling me. That's not what I'm telling you. What I want you to make sure is very clear in what I believe as a business owner is that your business goals align with your personal goals and what you actually want. That said, you may end up having goals that blow 7 figures out of the water. You may be able to set up your goals to a point where you don't have to hit 7 figures to get what you need out of your business. So the one piece of advice is to figure out what your personal goals are, right? And that's what we do at Peak Prosperity with our fractional CFO clients. We start with the personal goals. What do you have retirement to fund? Do you have college to pay for? Do you have houses to buy? Do you have vacations to fund? What is it you're trying to do? Money-wise, right? How much money do you need to make personally to live the life you're building this business to live, right? We're not all the same, and we don't all have the same goals, and we don't all have the same dreams, but we all want to build a business that supports our personal goals and dreams. That should be the purpose of your business. Okay, that is the purpose. So you need to figure out what that means to you. So write that down. What are my personal goals and dreams that my business is supporting. All right, because that's why we're all building our businesses, whether it's to fund these big financial goals and dreams, or if it's because we need we want the work-life balance of not having to work for someone else, or both. But you have to set your own goals and on the personal level to figure out what your business goals need to be. Do not set your business goals based on someone else's definition of success. Because what will happen, and I have done, I spent, like I said, BBA, Brave Bears and Associates, has been in business for 7 years. And it has probably only been in this last year that I truly set my own goal of my own definition of success, and then created financial goals within my business to get me there. Because forever it was just like, I'm going to build a 7-figure company. I'm going to build a 7-figure company, which still my goal, but with different outcomes. Because you guys, you can build a 7-figure business and still not have the work-life balance that you desire. You can build a 7-figure business and still not have the cash flowing out of your business and into your personal bank account to fund your travel, your houses, your future. All right. So my piece of advice is to set your personal goals, figure out what that looks like, and then design your business to support those goals. And that's exactly what we do at Peak Prosperity. So make sure your definition of success within your business actually aligns with what you want from your business. Okay, I don't know how else to say that, so I'll stop beating a dead horse. But if you get nothing else from this whole entire training session, I hope it's that. Because that'll save you a lot of time and energy and headaches. All right, next question. So you mentioned Zone of Genius in various trainings. What is it? How do I know what mine is? All right, Zone of Genius. So this is in numerous books, numerous trainings. I work with Rachel Rogers at Hello 7, and she talks about Zone of Genius a lot. So that's where I think I first heard this. But since then, of course, now I hear it anytime I'm listening to a podcast or reading a book, it sticks out to me, right? Zone of Genius. And what essentially that means is, what is your superpower? All right. What is it that you bring to the business that you're good at? What is it that you do in the business that no one else can do? What is it that you enjoy doing? It's all these different pieces that play into what actually is your zone of genius. For me, I believe my zone of genius is teaching, is sitting here and helping you guys understand different pieces of running a business. But what you can do, there's tons of quizzes out there, right? Like I did Clifton Strengths Finder, but there's tons of Strength Finder quizzes out there. Take one, take two, figure out what your strength of your zone of genius is, what your strength is. But if you look at, I tell you to make a list of everything you're doing in the business, right? If you make that list and in one color, you mark off what you actually like doing, right? And then maybe in a different color, you mark off what only you can do. And then in a different color, you mark off what you're like the best at. And you figure out where all those colors connect. Like what are the tasks where all three of those pieces come into play? That's your strength. And the other key to that, guys, is money generating. Okay, whatever you do within your business should be money generating. So if it's leading your leadership team, that is money generating, right? If it's making big decisions in your business, right, which is what CEOs do. They lead their leadership team and they make big decisions in their business. Those are the biggest money generating activities you can do. That's where we want to end up. In the meantime, what are you doing to get from all 30 of these things you do to those two things? You're narrowing your tasks, your regular tasks down to what's in your zone of genius, and you're getting rid of everything else. We've done tons of trainings on this. So if you, like I said, if this is your first time joining me or you're like, what are you talking about? Definitely go check out those trainings, especially I want to say training 2 and 3. We talk all about really focusing in on what what your zone of genius is and making sure you're focusing your time and energy in that area. So yes, what is it and how do you know what yours is? Take a quiz. All right. What exactly is fractional CFO work? That dang bug. So let's start with what so when you think of a CFO, right? A lot of people are like, okay, you hear the term CFO, and before I did this, like back when I worked in corporate America and I was doing accounting for corporate America, I always thought of our corporate CFO, right? Who was the bigwig, the head of all of our accounting, all of our finance, the whole, that one person at the top of everything else. And I was down here, right? There was like hundreds of us down here, and it was the one person in charge of all the financial sector of our business, of the corporation. And I knew that person made a crap ton of money, right? And that their job was to take everything that we all did, right? All the accounts payable, all the accounts receivable, all the account management, all of it, that trickled up, all the accounting, everything, and take all of that data. And then what they do is they make decisions. They make key decisions within the business, and then the CFO works with the CEO to advise them on making big business changing decisions. So that is what a traditional CFO does. So their goal is to find new ways of making money for the business. All right. And we talk about levers to pull. Levers we pull to increase profit. So do we increase revenue? How do we decrease costs? How do we cut expenses? That's what the CFO is taking all this data and trying to figure out and advise the CEO on. And what we do as a fractional CFO, because the thing is, again, we think of CFO and we think of these 8, 9, 10-figure companies who are paying, 6 and 7-figure salaries to their CFO. But what they do, right, help their business make more money, is something that every business of every size can take advantage of, can benefit from. All right, even when you're first starting out a business, making decisions based on financial data, based on the figures, is something that will help you grow and scale your business faster. So how do you get that expertise from that 6, 7-figure CFO for these huge companies? How do you get that knowledge, that expertise at a business that's not big enough to pay 6 and 7 figures, right? And that's where fractional CFO work comes in. So, and what we do is we have a very niche group of people that we work with, because I've created a business model. Like I've created a CFO model that I can implement and help all of my clients. They're not all the same, but this model that I use works in the same way with all the clients within my niche. All right. So that I can advise them and help them make more money in their business. So what we do is we create a roadmap, where we're going, where we are, and how we're going to get there. And this is how honestly, this is how all CFOs work, right? You look at the data of where you're at now. You've created this projection or this goal, right, of where we need to be. And then your CFO creates the roadmap. Okay, well, here's the levers we're going to pull. Here's the changes we're going to make to get from here to there. What we do, because we work with small businesses where the business owner, right, relies on this business for their income, they're really the biggest shareholder, the investor, right? We start with the business owner's personal goals. All right. So what we do, let me start with, so that we always start with where are we going? So we sit with the business owner, we talk about their personal goals, their personal dreams, and this becomes our destination, right? As we're building this roadmap, we start with the destination. Where are we going? And then in our second meeting, we talk about where we are. So we evaluate financial reports. We evaluate the segregation of duties. We evaluate these standard operating procedures. We figure out, okay, where are we starting, right? How much money are you making? How much money are you taking home? Where are you? How close are you to your destination? And then we create the roadmap to get us from here to there. And how I believe, and again, I say this makes us unique because we're not the only fractional CFO that does it this way, but this is not the typical way that fractional CFOs work, in that we start with the business owner's personal goals in mind. A lot of fractional CFOs, they go off industry standard, they have certain percentages, formulas, things that they plug in that they just kind of use across the board. Ours is different with every client because every client's personal goals and personal financial needs are different. So I love how we do it. I love that I get to work with each business owner on a very intimate level. It's my favorite thing. So what exactly is a fractional CFO? In everyday terms, what we do is we work with you as part of your leadership team to help advise you on important decisions to make more profit faster. And we also, like I said, another piece to what we do is we help find ways to find that work-life balance. All right. And that's one thing that like fractional or real, traditional CFOs in big companies, they're not looking to help their CEO work less. That's not their job. Like they're there to make more money for the business. And well, that's our goal. Our goal is also to make sure you're happy as the business owner. Whew, okay. Can my current CPA help me with fractional CFO work? Maybe. Ask them. Fractional CFO work is becoming more predominant. I mean, obviously, like this is the first I'm talking about it, right? Like I started in the accounting and financial accounting world. I've spent the last 7 years in the tax world, and I'm kind of combining them, going back to my financial roots in this fractional CFO piece. Well, I'm also able to kind of bring the tax piece to it. So I'm unique, I'm cool. Not a lot of CPAs are doing both of this yet. I think we're going to see a trend change in this aspect. I think we are going to find more business or more CPAs kind of not lean out of tax so much like us, right? We do the CFO work for our businesses. We also do the tax work because we can. So I think you'll see more CPAs kind of leaning this way. And I think because technology and software and artificial intelligence, all those things are making it easier for us to do, like to take what's in our heads and help you guys, right? In this capacity, we're also realizing that there's a need for this, right? There's a way, we're finding ways to take this CFO idea, this CFO concept, and apply it to smaller businesses and seeing a rate of return on that. Seeing that when small businesses hire a CFO, they see a return on that investment because they see increased profits. They see less, let's just go with they see increased profits. We'll just stay there. But can your current CPA help you? I don't know. You have to ask them. I would also, one thing to be very, I don't want to say weary because that's not the right word, because while a lot of CPAs and accountants in general are turning toward this fractional CFO work, there's nothing wrong with that. I would just make sure you kind of get an idea of what it is they're actually going to be doing for you, because everyone, like I said, there's a lot of this looks different in different firms. So make sure that what you're expecting is what they're doing. Just because they're like, yeah, I do fractional CFO work, that isn't a ding, 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 ding. Okay, we're a match. It's like, okay, has potential. Now let's figure out if it's actually a match and ask more questions and do some more due diligence. All right. And I think our very first training talked about that a little bit, about what to ask your CPA or your fractional CFO to see if they can actually help you in this realm. All right, this was a good one. So my business just hit the 6-figure mark, but I think a CFO would help me get to my 7-figure goal faster. Can I hire a CFO now, or do I need to wait until my 7 figures? No, you can do it now. And it doesn't, like I said, it's not going to be me. And guys, the biggest reason that we say we work with 7-figure business owners is because the financial investment in our program at Peak Prosperity is not one that a lot of 6-figure companies are able or willing or ready to make. It is a 5-figure annual investment. And so you have to have the money there. You might, it's like, okay, I have this money. Like the clients that come to us, they are profitable, right? They are successful. They've built this 7-figure business, so they know what they're doing. But the clients that work with us specifically, not with any CFO, but the clients that work with us specifically are ones that got to 7 figures, thought that 7 figures was this magic place where work-life balance happened and financial abundance existed. And they're here and they're realizing that's not it. It's not the magic level, right? There's different work that needs to be done to find that balance. It's there. They just need to find it. But that can happen at any level. And there are CFOs. I have colleagues who do CFO work with smaller companies that are in like the 6-figure mark, right where you are. And I can't remember who asked this question. I'll look at that afterwards and tag you. But they specialize in helping 6-figure business owners, right? And part of, that looks different. And every firm is different. Every service package is different. So it's finding one that actually works with what you need. All right. So yes, you can hire a CFO now. You do not have to wait till you get to 7 figures. Cool. All right, that's it. That's all I have for questions. Did I really go through them all? Okay. Yes. So work with us. If you have done any, right? If you've gone through any of these videos, anything really stuck with you on how we do things at Peak Prosperity, and you're like, yes, I am 7 figures. I am feeling stuck. I am working more in my business than I want to. I am not paying myself nearly what I feel like I should be paying myself. Any of these things, go check us out. Website's there. All of our information about our program is there, and we do free discovery calls. Click on the Work With Us button on that website. I think it says Work With Us. There's a 8 to 9 question application. Really what that does is it gives me the background before we chat so that I have to ask less questions on our meeting. So our meeting is more intentional and more productive. We'll see if we're a good fit, see if we can help you out. And if we can, we'll talk about it and we'll tell you what our program looks like. If not, no harm, no foul. All right. But I'm very excited for what this does, what we are helping our clients do. Like I said, our current clients, what makes this program special to me is the intimate relationships that I get to build with my clients. I talk to my CFO clients every single week. We actually have a face-to-face. My Colorado clients I go to. My out-of-state clients, we meet via Zoom once a month. We get on a call, every other week, and we're texting, each other to, making sure we're okay, answering questions, seeing if we're good, every week. So, yeah, it's awesome. I'm looking, like I said, I have 5 spots available to take on new clients right now. So very limited, but very excited to fill those. So if you are interested in working with us, check us out, see what we're about, schedule a call with me. No harm, no foul, no risk consultation, just to see if we are able to help you. And if we're not, if I'm not able to help you, I will let you know, and I will hopefully put you in the direction of someone that can help you. Because I feel like fractional CFO work is something that every business owner can benefit from, even if it's not with our firm. So cool. That's it. This training series has been awesome, you guys. I've really enjoyed hanging out with you guys not even every week, 3 times a week. And if you enjoyed hanging out with me, then I am going to continue doing live trainings every Thursday at 10:30 Mountain Time, Colorado time. So 9:30 Pacific, 12:30 Eastern on Thursdays. That'll be our standing date and time. I will adjust. As you guys know, things come up. There's always a need for adjustment. We'll change as needed, but going forward, that will be our standing appointment each week. I will have a topic that I will come teach you guys on, but I will also always end with a few minutes of Q&A. So feel free to bring your questions. That said, I've enjoyed the last few weeks with you guys, and yeah, I look forward to meeting with some of you. I do have some discovery calls on my calendar. I'm excited to see and meet with you guys, and everyone else who watches this and gets on my calendar. Let's go. All right, guys, have a great week. Bye.